Good morning, young lady.
Good morning. Good morning.
So, I made about 150 bucks right here. A little bit more. I got 2 left, but kind of faked me out with a little bit. I was looking at the higher time frame also. So, let me see if I can pull up the trades. If I remember how to do it here, fills and orders. Yeah. See how many times I added? I just kept adding on the pullbacks. I was like, you know, looking at the higher time frame, that's why I didn't worry about it, and I just kept adding. But I knew we had the possibility to run to this level, and I still have orders down here, 1 for 5 and 1 for 10. But, you know, we're getting close to that news now. I'm going to actually take these off because I have no idea what that news is going to do. So I don't want to get stuck in it. I'm glad I just noticed that. But you see that fakery right here? I'm like, come on, man. Are you kidding me right now? But I didn't move my orders. You know, I kept them all right in this area. And I was going to let 2 run. Go ahead.
Industrial production at 9:15. I'm not sure if that's going to be something. I have a red dot next to mine, so I'm not sure.
So I went in and I got this all set up, but I sent him an email and they responded, you got to turn on desktop notifications, and I did, but now I'm getting notifications for every single thing in the world, and it's starting to drive me nuts. But I don't see anywhere in here to turn on desktop notifications only for this, and it took me a while to figure it out because I had to filter out all this garbage for Canada, Europe, and all that junk. And then I only picked the ones with 4 out of 5 and 5 out of 5, because really the only ones we're ever going to listen to is the 5 out of 5s. The 4 out of 5s really aren't going to do anything to the market, so I don't ever care about those. But
yeah, I'm feeling a little FOMO right now. I want to put trades up, and there's no reason to.
Well, what I'm looking for, right? We got a gap below us and a gap above us, so that's why I'm letting these sit up in this area. Because if you look at it right now, this was what made me decide also to buy that, but we're in a range, right? And we got divergence in the range, so I was confident in taking these trades. Right, they might play that little game with you for a minute or two, but when you know what you're looking for, take the trade. You know, I mean, the worst you could do is wait for it to come back down here. You know what I mean? But you always have to remember, with this, gap above us and below us, I would imagine, right, on a normal day, we're going to come back up here before we pull back down. Because notice where, if we look left, right, the bulls are going to want to try and reclaim this high from yesterday, right? So any way you look at it, I mean, coming back either to the high up here or here is very, very high. The odds are very high. So, I'll take that trade. But now, finally, I'm starting to see the Elliott wave theory, all right? We're finally getting a pullback to the downside. This is what was driving me nuts this whole time, because the Elliott wave, right, you'd have one move up, 2, 3, 4, 5, 6, 7, right? And what do I say? The market likes to move in 2s, 3s, 4s, 5s, sometimes 5s. But to get 7, 8, it's like, are you out of your mind?
You're 1 minute from 8:30.
All right, I'm going to leave these trades on. Even if we do get that pullback, I'll just add. I mean, I'm up on them $29 right now, so because of averaging down, knowing that we were in that range. But now, let's see what this news is. I'm going to turn this on, because Bazinga will usually say what it is. And let's see if this works any better.
Ooh. Something happened. It just took a big dump.
Whoa! Holy Nike!
I
And
missed
these ain't
it.
even out yet. I would have liked to buy that.
Retail sales plus 1.3%. The estimate, that's for
Order
retail
filled.
sales. The
Got filled
estimate
on
was
that
plus
one.
0.4%.
And I'll take the profit here.
Retail sales plus 1.3%. The estimate was
Yeah, so now we
1%.
should get that move to the upside. Let me just see if it says on here.
What do you say?
Where is it?
Import price index minus 0.2% versus minus 0.4%.
It's not showing the actual.
Export
Let me
price
go
index
to.
minus 3.
Let me just go here and see if they posted it, because they'll post the actual. I'll just have to look at it, But I don't want to be jumping back and forth. So the consensus was 6.9. The actual came in at 8.3, which is better than the consensus was. So even this one was better than the consensus. So we should have no problem getting filled, especially with a gap above us. And the bulls are going to want to try and bring it back to here. But again, if you're looking at the bigger picture, we should be coming back down to this 11,600 area.
All right, so I'm gonna be daring. Oops.
And again, this is very, very odd that we're not getting that double bounces on these the last two times. It doesn't make sense.
Order filled.
What order got filled? Oh, that got filled already? Good.
Order filled.
That's me.
All right. Oh, that was you. I'm like, what got filled? But mine just got filled, so good.
I just in
So
and
now,
out.
now, come on, I want to move these up. I want to move them up. Up, darn
Order
it.
filled.
I'm going to keep this one
63 on
way
that
up
one.
here. Because now, now we're definitely expecting this to come back and fill that gap for sure.
Red on the 30, red on the 15, and red on the 5.
What's that?
It's all red on the 15, 5, and 30. Candles.
I wouldn't pay much attention to that on the colors on the higher time frames. But anyhow, here, according, to what we're looking for, now it's starting to make much more sense, right? Because now we should get that pullback to the downside, right? Now we're finally getting that rounding pattern, all right? You could look at this as like your head and shoulders. Here's the neckline, right? You'd be looking for that break, but we're going to have to wait and see if anything more comes out of Russia, Ukraine today, because that's going to have a huge impact or Poland, what's going to happen with NATO and all that garbage. So we got that in our favor, as well as, coming back down, breaking this neckline, and we'd be looking for that 1, 2, or 1 like to here, and then 2. But my target goal for this is going to be this 11,600 area on the higher time frame. And again, now we're not doing what we're supposed to do. I'm going to go ahead and cancel that out.
Order filled.
I'm just going to take it off because the market's just not making sense. Nothing makes sense right now. We're just in a time in the markets where it's better to lock in your profit when you got it. We'll just use the charts. Like if this comes down, it looks like we're getting divergence now. But, you just got to keep the market makers in mind in the games that they play. So if we get a decent pullback into this area, I'll buy one back up, for a quick bounce. But I'm not going to chase it. I'd rather just take the money off the table and put it in my pocket than play the games that they're playing. Now, why did Benzinga shut off? Are you kidding me right now? Oh, you can't make this stuff up. Now, why is this all back to that? Oh, okay. Okay, and they still don't have the actual up here. I don't understand. I gotta call them. What am I paying them this kind of money for? For garbage? For, like, delayed information? What a joke. What a joke. Alright, so we did get that divergence there. I'm going to wait, see what we do right here. But let's go ahead and start talking about the channels, because I want to keep this really focused on that. We could still trade when we see a good setup, but I missed that divergence right there. And I didn't want to hold that position for nothing. Only for them to play games. So, anyhow, what do we got here? Alright, I mean, if we tried to draw a trend line from here, right, that trend line is obviously broken. But if we bring it down, right, bring that trend line all the way down, because this is where we would be looking for that bounce, and notice where that brings us, right? Look at how good. This is why I love drawing my trend lines differently than other people. Look at where that trend line brings us. Right? I mean, is that not beautiful or what? But you just bring it all the way down, and that would even give you that 1, 2, right? The moves that we're always looking for. Remember, zoom out your charts. Look at a bigger picture. Alright? So let's all go ahead and mark off that trend line right there. And then we'll start talking about the channels. So let's go ahead and do it properly. Alright, so we're gonna... Let me get it here. We're gonna start it right up top here at this high. Bring it down. That looks about right. That looks good. And then I'm just going to A-ray it. So, let me bring it up a little bit more. Hang on. Okay, just like that. So I kind of just used it on this one and the highs of these two. And then we'll just let it A-ray. So we'll just double click it and then click that A-ray so it just shoots down across our screen. And that'll bring us into a really nice area right here. Right, that's where we should be expecting a bounce anyway. Even though we're looking for this pullback, you know, our first target will be 11,775, around that area. Well, our first target's going to be on this time frame, 11,836. Then looking at yesterday's price action, 11,750 and possibly 700. But my goal is to at least get to the 61.8. Now, again, I told you guys about the Fibonacci's. You know, if we're drawing our trend lines correctly, right, the Fibonacci's only going to do what we're already doing. So look where the Fibonacci brings us on this higher time frame, right? That's where our trend line is, right? I mean, our trend line would be in that exact area. But if it helps you guys to use the Fibonacci, you know, go ahead and use it, right? But the way I set mine up in here was to only have the 61.8, the 23.6, and the 38.2 to be showing on here. Oh, the 50% also, because these are really the only three that will...
Can you slow down just a little bit? I know I can't catch that. I was actually going to try to take a picture too.
Oh, well, here, let's just do it. We'll set it up right now. Alright, so go into your drawing tools and then find Fibonacci retracement. Click on, well, first, here, let's get your screens. Let's get your screens so we could actually put your Fibonacci retracement in it. All right, so let's do that, because this, guys, I'm telling you, this is going to take some time. It's not, this next day of boot camp isn't going to be ready overnight. And I'm actually going to make it into 3 different days, because this is really where your core fundamentals are going to come in and help you do better analysis and help you understand how the market's supposed to move using the Elliott wave theory. It's been around since the 1930s, but this is where, you know, everything's going to start making sense. All right, because after we're done with the Elliott wave theory, the channels, you know, then we're going to start piecing the puzzle together, and everything should start making sense. And all the other stuff after the next couple of days of boot camp are just going to be your basics. All right, you know, identifying, you know, your tops, like where does the market want to go, right? Where do the bulls want to go, right? They're going to want to come back up to this area, right? So we're going to be, I'm going to be showing you how to, you know, predict double tops, double bottoms. I'm going to show you a couple of my favorite patterns. You know, they're real patterns, but it's all going to be really irrelevant to your foundational knowledge of how to trade. It's just going to, you know, better equip you. So what we're learning in the next couple of days of boot camp is really going to be your solid foundation, and everything else is just going to be like an add-on to that. So anyhow, if you guys can get your charts like this, all right, so have this big move from yesterday to the overnight move, or the low from yesterday, and then we'll click on that Fibonacci tool. If you guys are ready, let me know. You're just going to start at the top of that wick, and then bring your Fibonacci down to the bottom of yesterday's close. And once you have that, let me know.
Okay. The top of yesterday's.
Yep, right up here. The price should be 12,000. Let me open mine up now that I got it, just so you can see. You see the very top of that wick right here?
Yes.
Right there. So like 12,117.
Okay.
And then you want to drag it down to yesterday's low, which is right here, 11,760.
Okay, we got our first fail here. Let's see. Try it again. Kind of have to really squeeze it up, huh? Okay.
Are you good? Do you guys both have it? Whoever's here?
I have it on. How about you guys? Do you have it?
Bocce Crypt. We may just, we might as well just use the Fibonacci if you want, but look at what I'm teaching you guys is, in my opinion, better than the Fibonacci, but this might help you guys a little bit better because I don't have my trend line marked off, but we would have one here at the top, right? And notice where the 23.6 is, right? It's almost right there, identical to where we would have one. Look at your 38.2. Again, we should have a trend line there. And then your 50% is actually yesterday's close. Yesterday's close. Notice my big yellow line there. All right, and then look at where the bottom of it is. You know, we've double bottomed right here, but I'm not marking the actual candle wick in my chart. So you see how accurate your trend line should be? That our trend lines are so accurate that we don't need the Fibonacci. You see what I'm saying? Does that make sense to you guys? Because I know one of you asked before, but even just like over here, you know, when your trend lines are right, you know, I guess I guess this Fibonacci nonsense came out because people didn't know how to draw trend lines. I don't know. But I was talking with Russo yesterday, telling her, you know, I'm an old timer, so I'm going to teach you the old timer things that work day and night. You know, this is, I could see the relevance in the Fibonacci, but, you know, I'm so used to, you know, trend lines, and now I don't even need any of this stuff because you just automatically know where stuff should be. And I know you guys aren't there yet, but if the Fibonacci helps you better, you know, that's fine with me. You can choose either one, however you want to do it, right? But make sure you're drawing your Fibonacci's correctly, all right? Because if you don't have it correct, then it's not going to be right, all right? So maybe you should draw your trend lines first and then check your work with the Fibonacci. That might be good. So whenever you're using a Fibonacci, okay, if you're starting from the bottom, like if after this big move last week, all right, if we did our Fibonacci last week, you can only bring it up to the highest point on your chart, all right? So if you're starting from the bottom going up, you can only bring it to the highest point. You guys keep yours where it is. I'm going to take mine off just to show you something. All right, so on the daily time frame, okay? And does this go back to December? Yeah, okay, so here's December. All right, let me get rid of this. Okay, so here is December. We'll just say this is 12/9. So let me go ahead and put a Fibonacci on this. So when you're using the Fibonacci, if you're starting from the top down, you want to start from the top and bring it to your lowest point, okay? So notice here, well, that would be irrelevant. So let me delete that. Let me just show you something. Let's just say we started the Fibonacci here and we brought it down to our first low right here, right? And then we were looking for retracements, okay? This is why I really only care about the 61.8, the 50, and the 38.2, all right? I'm not sure why this, oh, the 23. 60, 32, and the 23. The 50 was just in there. So notice where the market retraced, okay? You guys see those areas, right? Where it retraced to on the Fibonacci. And there's one more area that should be right here. All right? But now I shouldn't have done that. Okay, but if we drew support and resistance lines, look where they would be, right? Here you'd be making another one because you have one touch, two touch, right? Your 50% mark, you got one touch, two touch, you got one touch, two touch, 3, 4, right? So if you know how to draw your trend lines, the Fibonacci is irrelevant. All right, they sell courses saying the Fibonacci will change your trading, right? That's just marketing. That's all that is, right? The Fibonacci is nothing more than support and resistance, drawing your trend lines. But you can pick whichever one you want to use. Doesn't really matter to me. I'd rather you guys learn how to read the price action for yourself and chart, so you don't have to rely on something like that. Because the more information you can get down on your own, the less you're ever going to have to rely on anything else. What I'm teaching you right now, you'll never have to rely on another indicator ever again in your life. You'll never have to, be susceptible to the new tool or toy for sale on the market. You ever been in a hardware store and you heard some guy asking for like 2 midget widget things, and you're like, what the heck is that? But the guy actually knew what he was talking about, right? It's just old timer knowledge, old timer information. So anyhow, I'll show you guys how to set those up, if you want to use them correctly. So you guys should have your thing here. Let's go ahead and let me draw mine again. All right, so we're coming right down to yesterday's low. If you get your hand on the lines, what I would recommend you do, okay, first I always like to make mine bigger, but I would get rid of all the noise. Make them all white. All right, just stick with your 61.8, your 23.6, and your 38.2. The 50, you could keep that on there also, but make them all white because you don't want anything interfering with everything on your chart already. So I'll show you what that means, because it'll look so much better if it's white, in my opinion, but do whatever you want. I'm just saying, I'll show you what mine looks like. when I do it all white here. So let's apply it. I didn't get the 0 one, but you see now, because now you could still see your 20, your 200. It's less confusing. But if we were to get rid of all the, let me remove all the indicators. All right, so now let me go. What is this one here? Let me just see. If we were going to do it, we might as well put them all in there for you if you want to use them. So the 61.8, the next one should be 70 something. I'm not seeing it, so right, that these higher retracements I wouldn't really even worry about. But I don't know, if the white looks good to you guys and you want to use that, I mean, go ahead, more power to you. But you can use them. But again, if you're just drawing your support resistance, you're going to get the same exact results as you would using the Fibonacci. And let me just see if we move this up to the candles. If I did it a different way, let me just see if it would actually make a difference if I went and didn't use the candle wicks. Because I don't personally use the wicks when I draw my support and resistance. But let's just see if it makes a difference on the chart. Oh, now it's moving my whole thing. Alright, I'm going to have to... Alright, so let me go from there into here. Yeah, I guess I would do it just like the support and resistance. Then if you're going to use it, don't go to the wick, go to the actual close of the candle, because that does line up much better, right? It lines up, it lines up better than it did. So don't use the wicks, use the candle closes, not the wicks. But if you want to use it like that, that's fine. Right, you're still going to have to probably add in a few things. A few more lines for your look left if you're taking profits. Now, how did all my charts just get messed up? All right. So yeah, I mean, if you want to set it up like that, you can. If you want to screenshot this, the numbers that I have here and how I have the things marked off.
Announcing further actions.
But again, if I were you and you were going to do this, I would use it.
conditions.
Let me shut Benzing.
The company is reducing DRAM and NAND wafer starts by about 20% versus the fourth quarter. 2022, the reductions will be made across all technology nodes where Micron has meaningful output. Micron also working toward additional CapEx cuts. Expects its year-on-year bit supply growth to be negative to DRAM. And
then you're going to want to hit save as default at the end. If whatever way you decide to set this up, you want to hit save as default, so every time you open it, all your settings are saved and it'll open up all white. Why is that one still a different color? I got everything checked off. Oh, here's the 0 line, that's why. Save as default, apply. This way it's all white and it stands out better. You can see it a lot better. But again, I'm sure you've all seen the advertisements or the guys on social media, like Fibonacci's some secret tool or weapon. It's nothing more than drawing your support and resistance lines. That's all it is. I mean, you can clearly see, right? You can clearly see where where it's falling at, right? Same exact thing as drawing your resistance. And I'm not sure if there's supposed to be something here. Maybe I deleted it. I don't know. But we would have another line right here. I did have that until we just deleted it because we were trading that this morning. So you guys got it? I know that wasn't really much of an introduction to it, but again, if you just double click on it.
I don't think any of us have it. I think it's something we can watch the rerun on, you know, because we're going from channels and trends and you know
what? I'll add the Fibonacci to the boot camp. I'll make a day just for it, and I'll explain it in depth and detail, and I'll show you how to set it up and how to use it.
Order
So
filled.
this way we're not. What did I just get filled on?
Was that
Here I
me?
go again. No, it's
that was
me.
you.
Okay, well, anyway, I'll make a video on it. All right, I'll throw it in the boot camp. All right, because and I'll say in there, you know, it's just like doing your charting.
Filled.
Yeah, because we're all on the other things, and then RSI with the, you know,
Yeah. Like I said, I really don't want to confuse you guys.
yeah, that sounds great. Like a great idea to put it in the boot camp.
But all it is
Order
nothing
filled.
more than what you already know. You know, it's you could just use either one, either or, whichever way you really wanted to use it. You know what I'm saying? If that makes any sense whatsoever. If you want to use Fibonacci, you could use Fibonacci, but you're still going to want to make sure you're looking left for your micro areas when you're looking to take profit. You know what I'm saying?
Yes, that completely makes sense. You're giving us an alternative to setting, you know, support and resistance, price targets. That does it in another way. And I've never used it, so to know that I can set it up by the close and the high and the low of the previous day is great.
Well, it's really, in my opinion, I would use it more for your higher time frames, right? I wouldn't, you can use it like I just showed you on your smaller time frames, and it works just like support and resistance, but it's a really good tool to use for, you know, your higher time frames, like if you had a 4-hour chart here, because it'll give you an idea, but the same token, you should already have the areas marked off, you know what I mean? So either way you do it is fine. It's just, I guess, more of a personal preference. But it's not going to get, you know, all the little micro areas in between. But it'll get you your main areas where, you know, even without this, I mean, if we're just looking at this chart, we can clearly see, you know, we should be expecting a reversal right here, right? We should be expecting something right here, you know. But here and here, there's nothing there to expect anything, if that makes sense. But, you know, any one of these areas on to the left of us here, right? Any one of these areas you can be expecting a reversal or a bounce. So like I said earlier, I said, you know, I'd be looking for something here and here, including right here where we're at now. But now it's kind of, you know, just breaking down. And I'm going to have to, if we come back down there, I'm probably going to have to manage this position because I'm down 37 bucks on it. And we're not getting any resistance, but what I do like about this trade right now, well, we are starting to get divergence right here. This one's not doing what this one's doing. So they could be doing the same garbage they did to us right here, you know. Just that little pull down, so we'll see. But I'm not going to add any more positions down here yet. But we are in the right location, right? The bears want to do what? Just like the bulls want to do. They want to try twice, all right? So what we would be looking for a continued sell-off would be, what I would like to see would be, you know, kind of that 1-2 with your moving averages coming over, right? And let the bulls fail for that next leg down. But for this to just break like that, I mean, maybe I'm missing something in the news or something. But to not even get any type of support or bounce off there that's not right. You know what I'm saying? You guys starting to see how we should be thinking as traders, right? You know, being able to identify something like this, it could just end up being a very long wick, right? But to get into an area like this with major support right here, you know, even notice where these wicks ended up. So this is a very important area. And to not get at least a bounce, that something's not right. You know, am I missing some news? Did news come out on Ukraine and Russia? Or Poland and Russia? I don't know.
It's showing that retail sales jumped in October. That was good news. And they're saying, you know, that shows some economic strength. Import prices posted fourth straight monthly decline, which I think that's good news. I don't know if it is. So there's strong retail data. So it actually should be getting a bounce.
Right. I mean, especially in this area. I mean, here, you know, we do have the potential to come right back to here, but you would not expect this to just be an easy break. You know what I mean? Like we just saw. That's very odd. You know, like, you know what I'm saying? We're looking to come back up. Now I don't know where the overnight high is. See, I don't like Fibonacci. I don't know where my overnight high was, but the Fibonacci was right at it. So yeah, this was good because this one was given a divergence, this one wasn't. So, but I really didn't want to add because I know we have room to still run to the left of us, right? We still have this room to the left of us that we can potentially run down. So let me just go ahead and I just want to see if there was a specific area why that did that in. So if we go here, and then we go here. I don't like that you have to do this twice. And then this would be our final line. I'll put, oh, I have one there already. So let's just go back now and look at that. Yeah, and it came right down to the first one. So I would have added on that had I been prepared. Right? That's the key word, being prepared. And the Fibonacci isn't going to do that for you. You know what I'm saying? The Fibonacci is going to give you one area, but not all. So, you know, choose your weapon, right? As you're learning, do you want all the information or just part of it? You know, I'd rather
my
you guys...
favorite tool on this is exit and market and cancel. When you have a position, you know, if you need to get out of the position, that works great.
Yeah.
I like doing the manual setups right now because I think it kind of pushes in the learning process for me to understand what we're doing.
Well, that's what I'm saying. You know, if you're not willing to take the time to do your homework and do your research and mark off your areas and look left, you know, you're setting yourself up for failure, in my opinion. Learn how to do it, right? And then you decide a year from now, you know, do I want to use Fibonacci or do I want to do this, right? Because Fibonacci will give you major levels. It's not going to give you levels like this, right? And if you want to take quick trades in and out, you want to make money, you know, several times a day, you know, it's all going to be really dependent on what your personal style of trading is, all right? If you want to be a Fibonacci trader only, you could do that. All right, I think that's what B Custom does, not with Fibonacci, but with supply and demand, support and resistance, right? He said that works well for him. So he's just looking at major areas, and it sounds like, and from what I gathered, I don't know, but, you know, he'll just short it here and let it ride, hoping it comes down, back right down to here. You know what I mean? And you could do that, right? I'm just not that style of trader. You know what I'm saying? I can make a lot of money, you know, doing what I do. And let's just go look at, this is probably going to kill my thing, but let's see what I did today. But I took a lot of trades right here. I think I had 11 because of the pullbacks they kept doing. All right, so we took, okay, I only had 20 trades today and I'm up almost $600. Again, so now I know what this losing means. I think that's the amount of drawdown. I didn't lose any trades because it says my average loser is $4.38. My average winner is $39.03. All right, largest losing trade is $6. Largest winning trade is $313.50. That $313.50 though is from yesterday. I had 2 contracts yesterday, and I held them through that close overnight. You know, the 5 to 6 o'clock time frame. And I closed them out at like 9 o'clock last night for a $313 profit. Just 2 contracts. All right, I kind of did that be custom move, right? I bought it and then I sold it much later. So I'm up about $300 today off of 18 trades. But this is what your metrics should always look like, guys, right? I wouldn't count that 313, but you know, you're as far as your losing trades to your winning trades, right? You don't want it to be the other way around. So we took 20 trades. I don't know why it says 42 contracts, because 20 trades would be 40 contracts. I'm going to have to look into that. Oh, because I'm still in, and those didn't close out. So that's why. But anyhow, you know, that's the way I like to trade. All right, I can get in, I can get out, and I can make money. Okay, so making this money right here, let's go back to the metrics. How much did it cost me? All right, trade fees and commission. It cost me $30 so far to make 607, so my take home is 577. All right, so you can do that, right? But you can also, you know, buy it and hold it if you want. And we're going to do that more so in the channels. And then as we learn, right, and then when we're looking for those double tops and those double bottoms, then we'll go for the whole day, right? We'll trade for the whole day. But I want you guys to start off small. Start off being confident. Start off taking wins when you know you can win it, right? When it's guaranteed money, start off with divergence. There's no reason you guys could not have made money again today, right? Just with divergence alone. There's absolutely no reason that you can't make money with divergence. Every single one of you should be able to trade on divergence. That's what this whole mess was right here. All right? That's what this was. We had divergence, but it just kind of did its thing way too long. But I was relying on the higher time frame as well. So I didn't close it out. I knew the most it would come down would be to this area, so I just kept adding. But we did get this divergence right here, so that's where I started. But I did what I told you not to do, right? I say do a starter here and then leave yourself some ammunition for the potential pullback to where it should come. All right? So that's a prime example of what I mean by when I say, you know, just wait, right? Don't put all your eggs in one trade, right? Give yourself some breathing room so you can add on in case it doesn't work. And if you want to even be 100%, right? I saw the divergence right here. Okay, so I entered here. All right? And as it went up here, I entered again. You know, I was going to try and capitalize on the ride back up. But what happened? It came down. So I added 2 more here, and then I added more here. Russo came on. She saw I had a couple more sitting here and a couple more here. I had more contracts waiting to get filled, right? But there's a reasoning behind that. All right, so we made a little bit more money. We still have the overnight gap above us to fill. All right, so what I'm seeing now, right, retail sales were good. So even though I'm anticipating a pullback, all right, this is what you always have to understand about the way that I'm thinking. All right, I'm anticipating a pullback, right? According to the laws of Fibonacci, right? We should have a decent pullback that will look like this, okay? But we got several things. One is, you know, like I've been saying for a while, the Christmas rally, right? That's what the market likes to do every year. I don't think last year we did. It kind of dumped right in December, didn't it? We were just on that December chart. Let's go back to the day. And these don't go back that far, but look, yeah, right here in December, we didn't get it this year. I mean, we got the ride up in October, November, but it started selling off hard in December. So just with that in the back of my mind, where we're at right now, right? I know the bulls are going to want to come back up here and try twice. All right, I know that. That's just the way the market works. That's just how it's always been. All right, so if you look at this, right, the bulls came here, they came up, they came up, they came up, they tried again. This broke yesterday on that news, but it fell apart relatively quickly. And the reason being is because it's not staying in sync with what the market should be doing, right? The market doesn't like to make big moves like this, right, without resting or ranging, and you could call this somewhat of a rest, but it just keeps going. And that's not how the market operates. And that's why I've been frustrated the last few days, right? Because if you know how the market operates and you know what you're looking for, and you can successfully compile all the information that you have available, you can pretty much predict what the market's going to do on any given day, right? You've seen us do that day in and day out. I don't have a crystal ball, right? But all I do have is tons of experience and chart time, right? And information that you guys, I'm trying to pass on to you guys. So just keep in the back of your mind, those gaps to fill are super important, okay? We got a gap to fill above us right now, all right? So super important. We have an even bigger gap to fill below us, all right? More confirmation that we should at least get this 1-2 pullback. We might not fill this till January, all right? These are typically the months, November, December, where the market likes to climb, all right? It typically happens every year. You could see last year too, although in December it did start declining. Now, with all that said, we just got news with Russia and Poland, right? We know the economy is garbage. I thought it was comical because CNBC pulled out yesterday. Most Americans are so far in debt on credit right now, right after the PPI data, right? I'm like, you can't make this stuff up. The market says everything's fairy tales and roses, and then the news comes out saying it's garbage. It's like, come on. So anyhow, I know I'm rambling here, but I'm just trying to give you guys some insight. We have this gap above us, right? The bulls are going to want to try and bring this thing back up, but where the odds right now are for this market to take a rest, right? To take a rest, take a breather. And now what are the market makers doing, right? Are they anticipating for this, right, to come back and retest the high? Is that why we got this sell-off on that better than expected news? Because they're adding for the ride up here, and then we're going to see that massive tank? That could be, that could be part of the game plan. So how are we going to predict that? What would we need to see for that to happen? All right? This is what you want to see. Here's our pre-market high. Here's our pre-market low. Well, here's our pre-market low, right? Here's yesterday's low. All right, let's just go by yesterday's closing wicks, which we're at right now. All right, so how should we play today based on what we know? Right? We know where the bulls want to go. We know where the bears want to go. Okay, 2 areas right there. That's where people want to go. That's where the market wants to go. All right? This is where the market is now. So, in order for us to come back up here, what are we going to need to see? A break. The same exact pattern I keep showing you guys. And what are we going to need to see to come back down? The same exact thing. Okay? We're going to need to see the break and then to come back down. All right? It's really so simple. It's scary. It really is. Okay? But you're going to get the curveballs in between. Like yesterday, threw me for a curveball. This threw me for a curveball. You have to expect the unexpected. Okay? You always have to expect the unexpected. This whole entire move. All right, so we just got filled again. We're out. This whole move was unexpected, okay? Even right here, we should have started seeing some type of a breather, right? We should have saw some type of a pullback before the continuation higher. Remember, the market likes to move in 2s or 3s, all right? Elliott wave is 1, 2, 3, 4, 5, 6, 7, all right? And then what would happen after that? You'd get a 2-legged pullback, okay? And you can utilize this on any time frame, right? The Elliott wave theory literally works on any single time frame, all right? So let's look at it right here, okay? Let's just look at it right here. Here we have 1 leg, 2 legs, 3 legs, right? We consider this 4, and then it's just kind of going sideways. We had another big leg up. Then you got 1, 2, 3 down, 1, 2 up, 1, 2 down, 3 down, 4 down, and then you got the corrective wave back to the upside again. Okay, you had 1 leg, you had 1 leg, 2 legs, and then another leg down, another leg down, another leg up, down, I'm kind of going quick about it now, but you can clearly see the patterns, okay? You can clearly see the patterns. They repeat themselves over and over and over again. All right? It's going to take some time for you to actually begin to see them and how they play out. But learning the channels is going to help you better identify them. All right? And the more time we spend talking about it, like everything else, the better it's going to be and easier it will be for you to see. All right? So if we were to do this, right, here's your, what time frame is this? This was yesterday, so I guess we ended up ranging yesterday. I didn't look at the market too much. So we ranged there, right? We channeled, clearly channeled here, all right? Then we channeled back up. But within this channel, what do you see? You see one leg, two legs. Okay, then you can consider this the range. And then another range, right? Remember, channels are really going to be defined by price action moving and your separation, okay? So here you kind of get into some channels, but again, it's overnight. So although the market is in an uptrend here, I would have much rather, played this as a channel. I actually took a trade here at 4 o'clock this morning. Just a quick little one on that what? The legs, right? The Elliott wave theory. I think that was like a $6 or $7, and I took another one somewhere in here, right here, right in this area. I took another one, just a quick little short. But again, that was more of a, I think we were eating breakfast then. But that was more of a, a channel trade. And I missed this one, but I was pulling back on this one. I think we were ordering food at that time. But like I said, I wasn't really trading it all this morning. Than expected. It was better because it came in at 0.02%. Right? I just saw worse than expected, which is why I shorted it, on that big bar yesterday. And then what happened? We got another big bar. And that I was really upset yesterday.